Well, good afternoon, everybody. My name is Alex Fensky, and I am the lead agent for the Chicago Southland Homes team here at Keller Williams Elite. And I wanted to, we're going to start doing a market update like this for you every month. Um, for 2 years now, I've been doing these market updates internally for our franchise. And I typically deliver these to an agent perspective so that all of our agents understand what's happening, what's changing in the market. This all started back when COVID happened, and we were doing market updates literally every day because nobody knew what the next day would look like, and that's no exaggeration. Fortunately, these days, most things don't change every day in the real estate market. It tends to be a lot more stable than things like the stock markets. Um, but still, things are unpredictable, and there's a lot of forces at play. So, what I'm going to do in today's update and going forward each month is to summarize some of the most important real estate market information for you as a consumer. And you might find it interesting whether you're buying, selling, or maybe neither. But certainly, if you do have real estate plans, you are planning to buy property, sell property, whether that's your home investment, whatever it may be. I hope this will be valuable for you. And I'm happy to help interpret what all this means for you specifically if you'll reach out and say, here's what we've got planned. What do you think? Um, because ultimately, market conditions just are what they are, and everyone's situation is different and unique to them. Long story short, I've been doing these market updates for quite some time. I kind of have a process I follow. I'll give you my data sources so you know I'm not making any of this up. I get all my real estate market information from a company called InfoSparks, which is a data tool that's partnered with and sources directly from our multiple listing service, which is the place that agents get all of their information about the market. It's where all the listings are put. That's where all the closed data is. And so that's where I get my real estate market information. Technically, the data source is Midwest Real Estate Data LLC, or MRED LLC. And then any mortgage information that I get is going to be from the St. Louis Fed, which is the St. Louis chapter of the Federal Reserve Board. So they've got a great website, a lot of good information and charts there. So those are my data sources, and there's a few different things that I talk about in these updates. So I'll summarize what each of them are before I tell you what the numbers are, and that way you'll understand what I'm talking about instead of like on the news they just kind of rattle off some stats and nobody knows what they're talking about. So first thing I'm going to touch on is new listings, and when I talk about new listings, what I mean is the number of properties for sale that have become for sale in the time period in question. So we'll talk about new listings through the first quarter of this year. That means the number of homes that were put on the market. And when we talk about the market, unless I say otherwise, I'm talking about our entire multiple listing service coverage area, which is basically all of northeastern Illinois, extending from the Chicago metro area, all the way up through the northern border, through the Rockford metro area, down through, through all the west suburbs, through the Naperville metro area, Joliet metro area, and all the way over to the state line. That's our multiple listing service area. So with that said, new listings are first. The number of homes that came on the market, both detached single-family homes as well as attached single-family homes, such as condos and townhomes. That's the first thing. Now, for a long time throughout the pandemic, new listings were almost keeping pace with normal. They were a little bit below normal, but not a ton. And now there's kind of a larger departure. We're looking at, for the first quarter of 2022, there were 14% fewer homes listed for sale than there were in the first quarter of 2021. And 2021 was down from the prior year, even despite the effects of COVID, which was down a little bit from the year before that. So right now, the number of new listings that have become available in the first quarter of this year is actually down 24% compared to our last normal first quarter, which was 2019. So the new listing pie has shrunk by about a quarter. If you picture, I'll make the analogy of dessert at Thanksgiving. You picture the pie coming out, a quarter of it's gone. The chef took liberties and ate the first quarter of the pie already. Fewer new listings came to market. The way we measure buyer demand, so that's sellers. The way we measure buyer demand is by the number of contracts that are pending at the end of the month. So the number of purchase and sale agreements that are written but haven't closed yet. So that we call pending contracts. Pending contracts, surprisingly, right now are actually down. March, they were down 11% compared to March of last year. And when you look at the first quarter as a whole, they were down 10% compared to the first quarter last year. What we believe is the issue there, and the reason that isn't higher, is because of the lack of homes available. So what we're saying is that there's pent-up demand, meaning if 3 more homes came available right now, there'd be 3 more contracts right away. And I can tell you from being boots on the ground, I believe that to be true. When we have large piles of offers on any given listing, one can only imagine if you had 2 or 3 more listings on the same street, those buyers will be buying those as well. So pending contracts are actually down about 10%, though that's up over the prior years. So down from last year, but up compared to where it normally would be before the pandemic, up by about 13 to 14%. So demand is still elevated above normal times, and it's restricted. It would be even higher if there were more homes available. So the next metric that we'll touch on is inventory. Some of the language around these can get kind of confusing because we talked about new listings. Now I'm going to talk about inventory, which is just the number of homes that are available, not under contract, not sold, the number of active listings that are available for buyers to buy. And this is a number that has been consistently going down through the entire pandemic. And it's down at this point now to all-time record lows. In December, we hit a new all-time record low for housing inventory. There was fewer homes available in northeastern Illinois than there ever have been on record. And December is always the lowest month of the year. There's the lowest number of homes to choose from in December. That's a normal seasonal pattern. And from there, inventory always goes up a little bit in January, up again in February. It goes up every month until it eventually peaks in August or September. It never peaks in another month. It's always August or September. And it's always lowest in December. So that's the inventory cycle. Well, we broke that cycle this year because after the all-time record low in December, in January, instead of going up, went down because there was fewer new listings, and there were still more buyers. So it went down in January, new record low, second month in a row. February, same thing again. It went down again instead of up, another record low. And in March, again. So we've now hit 4 consecutive all-time lows for housing inventory, and there's fewer homes available on the market right now in Northeast Illinois than there ever have been, and we keep saying that month in and month out. So that's created definitely challenges in terms of how do you operate in the marketplace. We still got clients buying and selling all the time. It just changes a little bit about how you need to do it and what some of your expectations can be. But that's a significant metric or figure there. Now, what has that done to pricing? As you probably know, if you've watched any kind of news or seen any kind of articles about the real estate market over the last couple of years, housing values have come up quite a lot. Now, it depends on area to area. It's not the same for condos downtown as it is for single family homes in the suburbs, as it is for 2 to 4 unit buildings, or whatever the case may be. Real estate is a very highly local business, but there are also macro level trends that we can see happening. And overall, pricing has come up very significantly. Now, I want to zone in on the time of year we're in right now. We always see pricing spike up a bit because of all the buyers. We typically March, April, May are the 3 most popular months for contracts. And so during that time period, inventory is trying to catch up. Prices usually bump up a bit and then settle back down after that. But last year, February of last year, housing supply hit an all-time record low. Now, supply factors in the number of available homes and the number of contracts and closings happening. So housing supply is a metric we use. It actually tells us about the blend of buyers and sellers, of the market forces of how many there are of each. And housing supply is what predicts pricing changes. So very low housing supply means prices will be going up. Very high housing supply over 6 months would mean the prices, you'll see them coming down because there's more there's more sellers than there are buyers. So with that said, last year, housing supply in our MLS in February hit an all-time record low of 1.7 months of supply. It's very low. Um, and because of that, the median sale price between February 21 and June of 21, a 5-month period, the median sale price of homes in our MLS went from $255,000 to $300,000 in 5 months. That is a 17.6% increase. Not at 17.6% annualized, 17.6% in 5 months, which is the equivalent of about 40% annually. That happened last summer. Now, prices settled back down a little bit after that, but rest assured, they finished out higher than they started. That was at 1.7 months of supply. I want to tell you right now, February, March, we're at 1.1 months of housing supply. So what does that mean is going to happen or is happening right now as people are competing to get homes under contract? Prices, sure enough, are going up still. And I suspect in a few months, when we look back at these months and we look at what prices things closed for, we're going to see probably went up at a rapid rate. And I'm very confident in that because, again, this is metrics. So whatever all the reasons are for people buying or selling or whatever, these are the factors that have already resulted from all of those decisions. This is the reality of how many people are selling, how many are buying, and who's competing for what. So I think we're seeing prices go up quite a bit more this spring and probably through the foreseeable future. So that's it on our market metrics. I want to touch a little bit on mortgage. There have been major changes in the mortgage market. On January 1st of this year, just 3 short months ago, the 30-year fixed rate mortgage was averaging 3.1%. The last week, it's averaging 4.67%. That is a 1.5 point increase, nearly a 50% increase in mortgage rates over the course of just 3 months. It is primarily because of the Federal Reserve's buying and selling actions, not as much because of their target rate that they use. That's an interbank borrowing rate, but because of other Fed actions, specifically buying and selling mortgage-backed securities and Treasury bills. That's what affects the mortgage market. They're probably going to continue going up, although I don't think, and I certainly hope, not as fast as they went up the last 3 months, because the changes that the Fed was planning have now taken place. So the market was pricing in that those increases, but they are going to continue to go up as the Federal Reserve has now stopped buying mortgage-backed securities and is now starting to go through the cycle of beginning to sell them. So all that will continue to affect mortgage rates in an upward direction, and rates are going to continue to go up. So now to the part of our program where we talk about what's a seller to do, what's a buyer to do, what do you do with this information? So if you're a seller, selling for sure, selling is sexy right now. It is. As a seller, because there are so many buyers compared to the number of homes available, you're able to call the shots. You can pretty much name your price. You can pretty much name your terms. If you need possession after closing, or you need to sell a property as is, or whatever the case may be, you can pretty much say, I want the sale to look like this, and make it look like that. So that's a benefit of being a seller right now. Now, with that said, I've had some people say, oh my gosh, I should sell right now just because property values have come up so much. Well, I wouldn't do that. I mean, selling a property, whether it's your home or an investment, it's a big decision. So I wouldn't do it just because. But if you have plans that this allows you to pursue and it makes sense, then absolutely, it's a fantastic time to sell real estate. You could sell now for a lot. You could hold it for a bit and expect that unless something changes unexpectedly, you'll be able to sell it for more later. Now, when I say unexpectedly, the market metrics are going to take a long time to correct this. It's going to be a while, but I can't predict whether Vlad decides to launch an attack on DC. I can't control that. I can't predict that. And just the way that we didn't know that COVID was coming, and when it came, we thought it was going to do something to the market. It did that for a minute, but then it did the exact opposite thing. That kind of stuff we can't control, we can't predict. But as far as the market metrics are concerned, nothing's changing. So you should expect to be able to sell for a higher price a little while from now versus today. Prices are going up right now. Now, if you're selling and you also need to buy at the same time, that's something that, sometimes people feel like, oh my gosh, that's a bad decision. Well, just remember, you're selling and buying the same market. So one of those transactions will always be easier than the other, unless you're in a balanced market, then they'll both be the same easy. But in a seller's market, it's easy to sell, hard to buy. If you think back, I don't know if anyone was around and doing that sort of thing during 2008 through 2012. It was the opposite. It was easy to buy, hard to sell. That's always going to be the case, and that's okay. We've got ways to work through that. We have different ways to help you plan out the logistics of how you do that. It can be kind of tricky, but we've got lots of solutions to be able to help plan those logistics out and make it work for you. So great time to sell if you have a reason to sell. Buyers. This is a tough one. Buyers are saying things like, oh my gosh, that price is just too high. I'm not interested. These properties aren't worth this amount. I'm going to wait it out. And I want to tell you it's a dangerous statement because you can't buy. I watched some pretty weird documentaries and stuff like that. But as far as I've seen, you can't actually buy property in the past. You can't do it. I haven't been able to do it. I like to think if somebody could pull that off, it would be me. But I haven't figured that out yet. You can't buy in the past. You can either buy two choices, today or in the future. That's all you can choose. So as much as it can feel like, oh my gosh, I don't think properties should be worth that much. The fact of the matter is they are. And based on the market metrics, it's going to only become more expensive in the future. We talked about prices going up. That's a certainty at this point. Mortgage rates going up, a certainty at this point. So the house you see today for $300, and you can get a 4.67% rate on the mortgage 6 months from now, it may well be $320 and your mortgage rate's 5%. And if you're holding out solely for the purpose of pricing, I hope you're prepared to wait a full and complete market cycle. Just like the seller in 2009 may have said, my house is worth more than this. I don't want to sell it right now. I'm going to wait it out. That's cool, but don't think waiting it out means a year or two. For that 2009 seller, waiting it out meant till probably about 2015, 2014, before pricing began to get back to what it had been at that time. So real estate market cycles tend to land somewhere between 7 to 10 years. So if you're going to wait it out because of pricing, just be prepared to wait a very long time. Now, if you can't afford the home, don't buy it. Like there's no reason or no excuse to go make a poor financial decision to go and purchase a home that you can't physically afford. So don't do that. But if it's all up here, if it's just a matter of I don't feel like I should pay that amount, you probably should pay that amount because you're going to look back a year from now and go, I'm glad I paid that amount because now I'd have to pay even more, and my money would cost more on the mortgage. So be careful with that. I'm going to wait it out mentality because of what we see and what we've been through. Market cycle after market cycle after market cycle, and it's going to be a long time. So it is unquestionably more affordable to buy a home right now than it will be in the near future. So if you're not satisfied with your options now, just maybe you need to do some soul searching, and we can help you with that. And also remember that whatever home you buy now might not be your last one. You might buy something now that they'll get you through the next few years. A few years from now, you can sell that one and buy another home that will be your upgrade home. Typically, your first home is not your last, and people do buy and sell a few times throughout their ownership careers. So, with all that said, I hope that's useful information. I know it's a lot of information. This is recorded, so you can go back. But even better, you can reach out to me with any questions about what this means specifically for you. If you are if you're considering buying a home, selling a home, doing both. You're considering what to do about investment property, if you own it, whether to sell it or keep it, if you're thinking about 1031 exchanges, if you're thinking about buying additional investment property, like I am right now, I think I'm perfectly happy to help you weigh those options out. So if anyone has any questions, I'll field them now. Otherwise, go ahead and drop them in the chat, and I'll answer them as soon as I see them. You can visit our website at chicagosouthandhomes.com. Of course, our Facebook page here, facebook.com/ChicagoSouthlandHomes. Or you can give us a ring at the office, 708-808-0220. That's 708-808-0220. Thanks a lot. We'll see you soon.